All right, let's see. So we're close to 9:30 opening. Opening bell is in 1 minute. Some water. I just got back from the gym. Good workout there. Okay, cool. So I'm already watching price. I want to see if we can start rejecting here on Nasdaq and make our way lower. But again, let 9:30 opening dictate what we want to do. Not really going to push any buttons till a couple minutes after 9:30 open, unless it's clear, which I really think it should give us a sell-off. That's my initial expectations, but again, it has to be clear. So there goes 9:30 opening. On a 15-minute fair value gap. So what are you looking at right now for 15-minute chart and 5-minute chart? 15 minutes to the left, 5 minutes to the right. Some water. Put on the right accounts. Wrong account here. I don't mind if it hits the 20,250 level. I don't mind that. I mean, new chair. But this Shaquille O'Neal chair. Been about 2 years. Keeps on creaking. So in case you hear little creaks, it's just my chair. It's just my chair, not me. I ain't doing nothing nasty. So we're just watching price here again. Nothing too exciting yet. I would love to go to 20,250 level and then let's see if we can reject from there. But these highs also are in jeopardy right now. Let's see if price wants to run that out. Mind you, look on a 15-minute chart. It's already done some damage by running out these highs, and we're in this fair value gap. So I'm also watching that as well. All right. If you're to watch I did a markup like at 10, 11 p.m. my time yesterday. So I already have all these levels outlined. My expectations were if we are to run, let's go on 1 hour chart for a second. I mentioned if we were to close below this fair value gap, 1 hour chart, I would be looking for a run lower to take us probably to 20,000 to clear out all this liquidity. Obviously, it's gonna go in stages. You have this low here, this low here, and then potentially these lows right here, and then ultimately down here. That's my expectation. So going into the day. So we're zooming in real quick on a 1 hour chart only. You could see how we did get a close below 1 hour fair value gap, but now we're going up higher. One thing I'm also watching is this fair value gap here to see if price just wants to pierce that this high and then reject. That's something I can watch for. Or ultimately, if it just has shifted completely to bulls, then it might just go all the way up in here, which is another fair value gap from here to here. So there's a lot of areas where I can expect price to potentially have some type of resistance. I'll ultimately turn bullish if we can go above this 1 hour fair value gap. That's where I'll turn bullish. Until then, I'm kind of sitting on the mindset of just being bearish. You know, that's just the mindset I have right now. So let's see if we can get to these highs and then maybe start rolling over. We have 24 minutes for this 1 hour candle close. So ideally, I would love to see this candle close within this fair value gap here, the one it broke below, but obviously looks like it wants to push, so let's just keep watching. That's just the mindset I have overall. So see if we can get these highs right here. Just watching price. I'm reading this book called The Power of One More by Ed Millett, I want to say. The most important thing is mastering equanimity. Mastering equanimity. And I found that to be true in trading. Like, just your ability to stay calm. You got to think about what separates the best players in the world from those that are average. Think about the likes of LeBron James and Michael Jordan, the ones that can take a buzzer beating shot at the buzzer, buzzer beating winning shot. You have to be calm and collected, even though everything around you is in chaos. Same thing with trading. These markets are gyrating around, but you need to master the ability to have equanimity, have peace, and understand like, okay, well, price can do one thing, but I don't have to really chase it. I just need to wait for my setup. So it's a constant battle, and equanimity is also elusive. So you have to constantly chase it and make sure that you put yourself in that mind state. Okay, so that's kind of the mindset I have going into this in trading in general. Just having equanimity. I took those highs as expected. Let's see if we can get that rejection there. All right. So far, we just took out the highs, hitting the 20 down to 50 level. One thing to call out so far is the S&P 500. So whenever I'm trading, I like to pay attention to both markets, right? The Nasdaq, S&P 500, and actually US 30. So all three. I'm constantly watching them. I have about 6 screens in front of me. You don't necessarily need it, but it just makes my life easier. So US 30 right now has dropped way lower, taking out Friday's lows. The S&P 500 has failed to make a run above its intraday highs. So as much as Nasdaq is trying to appear, right? The S&P 500 has not been able to go up this high. It's fallen short. So just so you know, every day I start my day off by. So okay, midnight opening, which is 12 o'clock New York time, is when true day starts. That's when the day really starts in the markets. So I'm looking at the highs that have been established since midnight opening. This high here has been taken out. S&P 500 has failed to take out the same high. So typically when that happens, that leads to some type of either full out reversal or a potential retracement. So that's just something to keep in mind. I'm just watching to see if we want to start rejecting. What we do have in place here though is a 5-minute fair value gap. So this could be a little barrier. Fair value gaps could easily can drop in here in the support price, but my mindset is on being a bear. So just waiting for that perfect setup. Nothing gets set up here. Patience. Patience. I bet you some people really press buttons. No rush at all. If I don't see a trade, I will be okay. But somebody see gonna happen. It's not a trade, it's not a game. You get spat out, chewed out if you're just not careful. I've been sitting here trying to run like 10 miles a week to play soccer, but I'm trying to get back to that agility that I had. Let's look closely on S&P now. I think I'm seeing something I like now. Let's see. See something I like. Mhm. Patience, patience, patience. Patience. Sitting here just looking at S&P. I'm kind of marking S&P up right now. There's really nothing to do right now. It's Monday, so Mondays are not necessarily the best. It could just consolidate, move price back and forth. Nothing to be excited about on Mondays. Again, the Fed chair speaks to that 1:55 p.m. New York time. So that's something we want to watch. PM session might just give us a better setup. So whenever there's high volatile news, and I'm gonna show you in a second, the first thing you should look at when you come to these charts is your economic calendar. You want to pay attention to are there any news events. You don't want to get surprised by price action, just having the pulse move one way. So if you look on Monday, I just went to forestfactory.com. Look at Monday. You can see we have news at 1:55 p.m. So any folder that is orange and red are important. So I actually didn't even realize you had news at 9:45. Just got released too, just like 3 minutes ago. So we had this news just got released 3 minutes ago, and then now I had this at 1:55. So we want to pay attention to that. Then Tuesday we have 9 a.m. I like ISM manufacturing, so it should be also a nice move. What they do with these red folders, it's a good time for them to like manipulate price, move price one way to get traders faked out going one way, and then they'll take it the other way. So we should call it Judah swing, where they fake you one way and going the other way. So they might take price higher first, then take it lower. And then Wednesday we have this NFP, and then Thursday unemployment claims.
Friday NFP. So it's NFP week. This is a repeating factor. On NFP week, you want to be careful. Everyone's waiting for this Friday release, but typically the markets might give you good movement between Monday through Wednesday. Um, but after that, Thursday, Friday, you want to be very, very careful on how you move, maneuver in price, because this week could be more challenging than other weeks. This is stuff that matter. Like, it's not all about just getting in there and clicking buttons. You want to know what weeks, what landmines, what kind of things could be in the way of me making money, and you want to know that beforehand. So a week like NFP, you just want to be very careful, and you have to accept sometimes price might move very nicely, and you just might not take part in it, and that's okay. It's just part of the game. All right. So that's the news event. Still just watching price here. Nothing. Price has just been extended. Let's look at this from a regular trading hour perspective, right? This is electronic trading. Regular trading hours, price stops trading at 4 p.m. New York time and resumes at 9:30. So it tends to be like gaps in price form. So let me expand this. So you can see right here right away. On Friday, we close here. It's going to be a new day opening gap low. It's going to make it red. And then today, right here, we open right here, 9:30. Okay. So that gap in price, these two lines, again, down close candles close right here. Then bullish candles open at the bottom. So there was a gap in pricing here and here. So these levels tend to act as support and resistance levels. So you're just going to watch how price wants to interact with that. And then it's on a 5-minute chart. So we have these highs in place right here that we might consider running out. But ultimately, look at these lows right here, right? If you are a retail trader, like just trading retail logic, which is support and resistance, a lot of people think that this is a strong key level. The 20,134, this whole area, a lot of stop losses are going to be resting below there, right? So ultimately, I think this is a target. Now, obviously, there will be also stop losses resting above here, but look at all the work we've done up here. And mind you, look at this high. Price ran up there, taking out liquidity. And then we had this consolidation, a lot of back and forth going on here, a lot of work being done here, a lot of orders being placed here. And then price drops lower, has a little consolidation. And we see how this price right here pierces these highs right here. So some damage has already been done to folks that will be short with the move here. Okay. And then now we dropped again. And we're going a little higher. Maybe I want to pierce this a little bit. And then see if you want to start seeing price drop lower. There's just a lot of liquidity in my mind resting below here. Just looking at a regular trading hour chart. And if we just look at it from 1 hour basis, I just think there's a lot of liquidity resting here. Well, here, let me kind of hide all my drawings. Liquidity resting here, and ultimately here. This is obvious level where traders who put their stop loss. It looks like a strong base. So obviously we're going higher. I'm aware of that, but I'm trying to see if we can at least run out liquidity first, which would be these pools of liquidity, right? Before maybe we can find a way to make some type of resumption higher within this range. See all these bull candles here? Up, up, up. So the last down close candle in this range was right here. So this is on a regular trading hour chart. So if we do start making our way lower, I'm watching here to see if we tap that. If we don't tap that, we have all this range here where there's a lot of interest by buyers. So as we fade into that level, I might be watching to see if we want to take it higher from there. Maybe they don't. Maybe this company's lows, but it's just me thinking ahead of time. All I'm saying is we've just been creeping higher and higher and higher. We've taken out this pool of liquidity right here. I haven't seen any sort of move that's taken out buyers that are safely, that, I feel very comfortable just buying price. Ideally, I want to see the market run out some of the buyers. Same way here, market just dropping, dropping, dropping. Sellers got comfortable. Then you see price starts going higher, higher, higher. Taking on anyone, whether on a fund level that's holding for long-term shorter prices, that may have a stop loss here, had a stop loss here. It didn't matter when you had a stop loss. Point is, once price reaches a certain level, right, where did it hit? Look at a series of down close candles here. Right? It hit these series of down close candles here, and then price rejected to hit these highs. So that's what I'm just watching overall. Okay, let's get back into regular price. I think something might move in here. Here. So now we have the 5-minute chart to the left. What I'm going to do here is pull up. It's not even be the best trade, but let's see. Pull the 5-second chart for a second. So ideally, I actually should trade in here. I want to see this hold price. Shade this red. Put my stop loss right above here. So you can get to this fair value gap here, around 5-minute chart. And then ideally, I want us to make our way all the way lower down here. Oh, I didn't get it on this account. Dang. Talking to you guys. That's my entry on this other account. Okay. What I really wish I did, honestly, if I'm being real, I want to enter with a regular contract here. I think it's a very, very tight stop loss, risking 18 points. That's the only thing with these funded accounts. Like, you cannot, since I'm only up about 2,900, it only allows me to risk 5 contracts. If not, I'll put on 10 contracts here. I think it's a very good setup. And ideally, I want to see it take out those lows I mentioned all the way down here. So now we're in this fair value gap. So this alone could be someone's trade right here. A run from really this area right here all the way to this fair value gap. That's the setup for some people. But let's see if we can take this even lower. You see how quickly I was able to get in the trade. I was talking to you guys and I was like, hold on, something's happening here. So I wanted to, so I pivoted. But now this fair value gap, okay, this is something to understand. This could be a barrier to our continuous movement. So this could very well hit here and start reversing. Just because I'm strongly bearish, I'm going to ignore that fair value gap for now. But this could be a barrier in price. Just know this can make price start gyrating up and down before actually making it move lower. I actually rather see this make a speedy, an aggressive move back below this yellow line here within the next minute. That's what I'd rather see. All these lows. I know there's a lot of structure, but there you go. See, that's the aggressive move I was talking about. Let's see if we could stay below that level. Let's see one more push. Perfect. I like this. So this is on the 5-second chart, by the way, guys. So it's just different levels. Not your average trader. Humbly saying. But all right, I see this. There we go. I like this. Okay. I feel good about these sales. Again, still paying attention to this fair value gap here on this 5-minute chart. This could be a barrier in price, but I'm just heavily bearish on this. We really took out liquidity here. I think a lot of buyers are very comfortable here looking at the structure. They're thinking, you know, they're safe. I just don't see that. I think we could make a run lower. All right, let's see if that comes to fruition. I mean, a lot of stops are resting below here because what does price do at 9:30 opening? You have to understand, price wants to pick traders out, so they go higher. Right at 9:30 open, they go higher. What does every trader see? They want to chase this higher price. They see price break above this high. They want to be breakout traders. So some people might have their buy stop here, and expectation once it breaks that high, it's going to keep going higher. And then now it's even retracing here. A lot of traders will also think this is a nice retracement to buy. I don't see that happening. I do like the structure that's in place, if I'm being honest with you. This is a nice structure, but I think this is just a false structure. I think this is a make them feel safe, and then they're going to run price lower. That's just my take on it. All right. Steal this from possible. I personally don't like this speed is picking up here. Let's go on a 30-second chart to get a better view, personally. I see that now at this point. I use a 5-second for an entry. If we're to look at a 5-second fully here, just 1 second. Look at a 5-second on its own. Okay, so with this breakdown, if price is truly breaking down, where's it likely to target? This, based off a 5-second structure, okay? So let's just draw this out here. This is the target here, okay? Based on 5-second structure. Now, if we start pushing aggressively, I'm not going to be a fan. What is aggressively? I don't want to see us go back here. So now my stop loss has been reduced very tightly here. All right. So I'm only risking 10 points. So that's like what, $100? So again, based on the 5-second structure alone, we're looking at these lows right here. Because price has already ran up higher. Look at how consolidated here. Ran up higher. Okay. Traders are now chasing this higher. We start accumulating here. Because again, when it ran higher, it took out some highs. So it allows the market to get in for sales, smart money, and it now starts breaking down. So if it's truly wanting to break down, ideally, all of this build up here should get wiped out. So I'm trying to leave on a 5-second chart so you guys can see that take place. We went from talking to getting the trade so quickly. You guys are about to distract me, man. Let's see if we can. I want to see an aggressive push, ideally. And then notice again. So remember this red line I said it's a new day opening gap low. It could be. It needs to use as resistance. So I want to see price. If it is to touch here again, I want to see reject. I don't want to see start pushing all the way higher. So I think it should respect all of this. I wouldn't want to see it go above these highs. Put it that way. Ideally, I think from here it should just make its way lower aggressively. And this could be your first take profit right here if it's to go all the way down here. This is the 5-second chart. So talk about noise. So when you understand that the market delivers price a certain way, when you see it over and over again, then to me, like, there's obviously a controlling mechanism that controls the way price is delivered. It just is what it is. The way price is delivered is controlled. So that's why I'm able to go on these lower time frames, a 5-second chart, and still make a decision. That's the same shit happening. Now look at how we just took out these highs right here. And it's a good study. You know, the more you do this on a lower time frame, you can start seeing multiple examples. So we took out this high. Look at the reaction so far, right? And we hit this yellow area, which is that 1 hour fair value gap level that I mentioned on my midnight markups. And look at the aggressive push here. Look at these lows. So we know what you're doing, right? I could get out the trade right here. This alone is good, right? And if I had a regular contract in, I would have been up $900. But let's see it play out to, fruition. Again, a lot of people have to stop here. Look at this consolidation. What they teach you guys, double bottoms and shit, watch them run through this, okay? Now, this almost also trade, right? So look how it hit this new daily opening gap low. This, I could get out right here as well because this could act as a level of support, all right? That could definitely, and you see how it rejected. However, I don't see them leaving this liquidity in place. So this could hit here, run all the way higher, hit this level. It could. I don't think it needs to go up here again, but it could. Before then going lower. But just so you know, this alone, a run right here, is a trade because this could act as support. I'm just holding on for longer. So, because I see this consolidation, I want to see that get smacked. I ideally don't even want to see them run above this highs again because this high here, this run here already did damage to these highs right here. Okay, it already did damage. Like it already took out anyone that might be having a stop loss here. Obviously, it's a 5-second chart, but I'm just using the same principles I might use on a higher time frame. So let's just see if that holds in place. Here. I'm really mad I didn't put on a regular mini contract. But hey, money's money. Five-second chart, guys. Let me see an aggressive push. Aggressive push. What? Look, I say it and it happens, right? Like magic. Just get your ass lower, man. Stop playing and run out those lows. It needs to stop playing around. It's still playing around with this level. again, depending on your comfort level, you could get it right here because just made another low right here. But my eyes are on this liquidity pool I already mentioned, and this is based off a 5-second chart. So as much as people might say don't go on the lower time frames, I'm on the 5-second chart. So you tell me if when this plays out here, you tell me who's crazy, right? There you go. Boom. So I can take out 2 contracts here, right? Isn't that fucking beautiful? It's probably gonna go lower. So let me kind of resume out because this is why I don't want to just focus on the 5-second chart. It could get confusing. But this is a good point to take out something here. Even though I think it's gonna go lower. I have multiple accounts here, so it kind of sucks when you have all these accounts. Okay. No, I think lower, we still go lower here, all the way take out these lows. That's what I see happening ideally. But here, I have multiple accounts. That's why I'm kind of back and forth here. All right. So at this point, where do you want to put our stop loss, right? Let's move all the way down. 5-second chart, guys. Listen. This is what happens when you put in the work and the time. Y'all sat here. I caught everything live on a 5-second chart. Wonderful. So I'm just gonna move my stop loss here because it's rejecting now aggressively, and I'm not a fan. Modify order. Let's go to. It could go all the way up here. It could come all the way higher. Don't want to risk all that. My stop loss, because I want more, I'm just being greedy. I'll put my stop loss right here. Not necessarily being greedy, I'm just following what price is doing. But it's Monday, so this could easily, the fact that it took these lows and started rejecting, I don't like that. It needs to start pushing lower aggressively. It really does, and start doing that. If not, then yeah, we are probably going to make our way higher. Okay. I don't like this as much. I'll get out of my other accounts. Let's see here. Now we're gonna move this to the 30-second chart because the 5-second chart obviously has already done its job, right? So let's go to the 30-second chart and see what I'm anchoring my stop loss on. So there's a fair value gap here on the 30-second chart that I'm watching. That's why I have my stop where I have it. If it overcomes that, then I'll be out. Okay. But yeah. Let me just take a screenshot of this. It's always good to have libraries done. So beautiful. Okay, so got that out the way. Put in my PowerPoint library of trades. I don't know how many views I have. Probably one viewer. That's okay. You witness what just happened on a 5-second chart. It's fun. Now, only thing that's a problem. S&P is not wanting to move lower, so I will not be surprised. I'd rather see continue to run lower, take out all of these lows as explained earlier from my midnight markups. I had 2 views, right? Because I don't know what I'm talking about. I'd rather see it keep pushing lower. It's Monday though, so I'm kind of being more. I understand that it has to be in the back of your mind again. It's about equanimity, like just making peace with what you know is could be a barrier, right? But I think there's a lot of liquidity resting lower that it should still go for it. So let's see if they want to do that. But at this point, you could just be done trading, right? It already ran higher. This is typical. This is what the market does. 9:30 opening runs higher, tricking traders to go higher. And then you want to be the person that does the opposite, especially after you took out a pool of liquidity. Okay? It's that simple. So now the question is, this structure is a harder structure to run by, I'll be real with you. Just because if it was that simple as, for example, these lows here have their double bottoms, it's easier for price to just run through that. When you have the fact that price has ran lower aggressively, this move here took out these lows, and we have this structure in place in here, it makes it harder for price to just run through it. If it's just like a quick little double bottom, it's easier. Okay? I still think we run through it, but just understand the logic, the mindset. Like it's harder when you see those. So you want to be cautious of that. I'm just willing now to risk the other 3 contracts or risk the profits I have running to see if we can get lower. But now we are below this new day opening gap low. I don't want to see us run back above it. Okay? I want to see us make an effort to keep running lower. And honestly speaking, we're probably going to the 20,000 level. Can I sit back and hold a trade that long? We're going to see. We're going to see. All right. You guys are witnessing greatness. This is what it is. Talking my shit because I work for it. I work for it. Okay. These lower lows here that have just been made. Hold on, my mouse. Where's my mouse? All these screens can. This is what I don't like about having multiple screens. Your mouse gets missing sometimes. I'm trying to mark up something. It could be. Okay. So price just made a lower low here. I'm not seeing the same thing from S&P. I need to see it push lower. I need to see that. But do I think they should take out these lows? Yes, that's where my mind is. But again, it's kind of harder. It makes it's called a high resistance liquidity run. That's how I still pose it. Because this run here one more time has already done damage to these lows. So it makes it harder. Price just run through it. Versus again, look to the right of your chart. Look at how this was equal lows here. Okay. So just keep watching price though. I think we still have some energy to move lower. Frankly speaking, I want to see price come back here. So now we're moving our stop loss way into profit. So I don't want to see price touch here anymore. If I don't even want to see it overcome here anymore. If it is to even go up here, which I don't think should, it should act as resistance. Come on, Nasdaq, just keep pushing. You have a long way to go. If I think it needs to go where it needs to go to, go to 20,000. Always playing games. So that's another 150-point run. It's probably going to push very aggressively here. What are we watching here? Look at this. Fair value gap in there. Look how price dipped into and rejected. I want to see price obliterate that, unless that could be a problem. Price will go to 20,000, guys. Then, yeah, just be nice to see. It is what it is. I think it could do it. Just that's Monday. If it's Tuesday, I wouldn't be saying this, but it's Monday. And it's also NFP week. Some people just want to ignore it. No, price is just going to move to my target. You have to understand what could be in place. You have to make peace with what is in the way. What could obstruct price from going to a certain level. I've identified this 5-minute fair value gap. This could obstruct price from going to a higher level. I don't want to see price start climbing up higher. I really don't want to see that. If we start seeing that, then this is probably problematic. Okay, we're giving up some ground here to see if my sales want to play out. Super annoying when you have S&P 500. If you guys look at S&P 500, it's not moving. It's just consolidated. It looks like it wants to drop, but it's not doing it. So I'm just giving you guys all the factors that I'm considering, which is important than just me showing you a trade and saying, hey, this is where I enter, this is where I exit. I'll give you the mindset, the thought process of why I'm in the trade, what I'm considering while I'm in the trade. Super, super important. At this point, you just sit back and watch price. You already have your stop losses in play. So it is what it is. By the way, anyways, don't try to make an announcement, whatever. One other challenge has been passed on Top Step. So looking good. Looking good, not bad. Price moves where it needs to move to. The other challenge will pass as well. So you guys, if it gets there, if it gets to 20,000, or even perhaps below 20,115, if it gets there, then you guys will probably just witness me pass 2 challenges while on this live. Call a trade on the 5-second chart and give you the logic behind it. Price gets to our targets, and now we'll just see if we can get more. I think there's some targets at 20,000. Which is another 160-point run. Look how I also framed this 30-second fair value gap here after we were done with the business on the 5-second chart. Right? We took out those lows and we rejected. I made sure I took something off the table. When we did start retracing, I did lay out this fair value gap here. And look at how price goes there, pierces it, and immediately rejects. This is, I mean, it is not, price is controlled, right? You got to understand what's happening with price. It's not random. There's just no way. On a 5-second chart, 30-second chart, come on. The same shit happens every single day. Like, not every single day, but like the logic applies. Where are they trapping average traders? Because I'm not your average trader. Why are they trying to trap them? They push price higher. A 9:30 opening. Everyone wants to go higher. They see a high right here. Price has broken that high. Oh, good job. That's going to be people buying breakouts as well. So now you have buyers in the market, that have been triggered against the market by this aggressive move higher. And you also have a break of quote unquote structure. So people are now going to put buy stops against those buys. So 2 things are happening at this high. 1, people that are short had a stop loss right here. They got knocked out. The people want to get in for buys have a buy stop up here. And then they put them in there, right? And then What they do? They reject price. They got those that have stop loss here, and then those are stubborn, right? They say, you know what? I'm putting my stop loss right here. They're gonna go for them. And those are stubborn. They're gonna put a stop loss right here, and they're gonna go for them as well. So all the buyers here, this is just a logic, kind of funny. They're probably gonna smash, take them all out. Still, as much as I know that, we have this fair value gap to overcome. But I think we run through everything. This alone is another. I can take profit right here again. There's nothing wrong there. Because just made a lower low. So you want to be another, strategy here is as price makes lower lows after it hit your target, I can take another contract off. I'm just looking at a bigger picture. What I believe is a bigger picture. The framework here at least got to get smashed. Because a lot of people are going to move their stop losses to here. Yes, they want to fit. Most traders are resisting pain. So as much as it's taking them out, they're going to keep moving their fucking stop loss so they get smashed over here too. That's the logic. Now, what am I annoyed about right now? What am I still watching as much as I know that's the logic? S&P is not moving higher. Not moving lower. So this could lead to some type of retracement. And the question I have to ask myself, am I willing to weather the retracement? It doesn't have to happen, but it can happen. And the next question asks, am I willing to weather the retracement? Or do I just want to take something off the table? Now it's ran out this low over here. Right? It's up to you how much pain can you take. Look at them go for those lows. It's like fucking clockwork. Isn't it? So I'm just gonna take something off there, even though I think it goes to 20,000 today. Put a buy limit right here. Let's see if we can get there. I'm still understanding they don't want to get too. Okay, now this blue line's a 4-hour level. So actually, I like this fair value gap here. It could cause some type of disruption. It could stop my idea playing out. I'm just gonna leave it like this. There it goes. That's problematic. So that's why again, you could have taken something off right here. And these lows are harder to run out, like I was telling you, because of the fact that rates got these lows. So at this point, I have to ask myself what I want to do here. That's my account. And I'm just going to keep watching price because. So what I told you guys about how that retracing can happen, am I willing to take the pain? Am I willing to watch my profits come back against me? And ultimately, it could go ahead and hit my buy stop. It could just do that. That's the question I have to ask myself. Or you're going to ask yourself, because we already outlined what could stop price from doing what it wants to do. Right? So now we're watching closely here. I'll see if I want to close out this trade. Some of you will be like, "Okay, so I'll just close out everything." That's your preference. This is where trading, everyone can. It's art. You decide you want to paint your canvas. I'm just holding on because I think it can go lower, and this is all expected. I literally told you it's going to be a retracement. The question is, are you able to weather the storm? Listen, I'm saying everything before it happens, which is crazy, right? But the question you have to ask yourself: are you willing to weather the storm? Are you able to see your profits dwindle against it again? This could come all the way back here and knock me out, and I'll be fine with it. But I don't want to see that happen, obviously, or I really just don't care. If it happens, it happens. I want to see this act as a barrier in price. That's one thing I'm watching as well. if I'm being real with you, I don't like this retracement. I'm gonna let this 5-minute candle close. And depending on how it closes, I might just get out the trade completely. Okay, this could be very problematic. It's already proven to be problematic here. So yeah, now you're seeing how I would manage this. You could have done it differently, right? But to me, it's gonna hit my stop loss. I can see that happening right now. Yeah. Okay, cool. I don't care, right? I was able to still capitalize on the trade. You guys saw me call it out. I told you guys what could potentially happen. I told you guys where there's going to be resistance. And you can see this level here, this low, as much as it could have taken it, because this low already did damage by taking out these liquidity pools here. It was going to be harder to run out. And we had this little 5-minute fair value gap here that also coincides with a 4-hour fair value gap, which is this blue line here. So I'm not surprised that that happened. And I made peace with it. To you, you're like, dude, you just missed out on profits. I did this on a 5-second chart. I can do it again. Nothing. So, unfortunately, though, you guys not witness me pass every single challenge here. But okay, so today was $460. Not bad for these minis. If this was one, what's it called? I mean, this was a micro, so I had 5 contracts. I really wish I had 10. It would have been way better because I was taking 5 off at that low, and I had the other 5. But you only witnessed me pass. So this one, $800 trade, and then boom, this one's a pass challenge now. So you witnessed me pass this challenge here at 159,000. So now I'm just gonna pay for the funded account, and then we'll be trading 2 of those accounts tomorrow. And let's see. So this account's already funded, 150K. Just passed this challenge here today. You guys witnessed that happen. And then this one, $1,000 left on this one. And then my Apex account, very, very close. So, and this still trading here. If I'm still watching. Let's see if I'll do anything here. Watching this here. Honestly, I'll probably just call it a day here. I'm calling it a day, guys. So, I know Casey's looking at this like, hey, it's some money to be made here. So, just gonna say so. It still looks good because all I did is train to a 15-minute fair value gap. Nothing crazy. This is get taken out on that. This looks good still. I'll be real with you guys. I'll be very real with you guys. It still looks very good. If I was to get in, I'll go back to the 5-second chart. If I was to get in this, I'm just gonna watch. I'm rushing here, but I would want to see take out these highs right here. So that'll put it how much risk. So I could put no risk here. Let's just do it for the fuck of it. 5 contracts. Not that much risk. That's why I'm doing it. It knocks me out. It knocks me out. Oh, this is a wrong account, by the way. All right, so I don't like that anymore. All right, cool. How do you get up? Come on. See how it's doing me dirty? Now, all right. Anyways, I'm out. So you saw me risk that on the on this account here. I was trying to see if I could pass that challenge, but it is what it is. So 1200. Again, that risk was really supposed to be right here. I was trying to get out of that trade so the market moves quickly. All right. Anyways, guys, overall, solid setup, solid day. It's Monday. I'm gonna be content with what just took place. You guys witnessed everything happen on a 5-second chart. I called everything out as it happened, and that's that. So again, if you learn something from this, you want more of these, go ahead and subscribe to the channel. Drop a like, drop a comment if you think you just saw something cool, or if you learned something from this. Drop a comment. I'll catch you guys next time, and good luck trading.